analysis in terms of that commodity space. Peter McGuire from XM joins us now live from our Sydney CBD studio. What to make of oil? You had just a couple of weeks ago, Peter, people suggesting we're going to $100. Looks a little bit far away at this point.
Well, good afternoon, James. I think you're right. You know, you've had those US stockpiles. They're increasing. You've had a couple of weeks ago, as we know, that Hurricane Michael swept through the Gulf. That has certainly taken a fair bit of steam out of the market. Geopolitically, you've got sanctions starting to hit probably in the next couple of weeks in Iran, but at the present time it's been certainly hit pretty hard to the downside, down between 9 and 11% for WTI and Brent, and it's been a great short trade for the last 7 or 8 trading sessions.
So where to now, or do you think it sort of holds steady around these sorts of levels? I mean, and again, in the background, these geopolitical issues, you've got the US and Saudi Arabia seemingly, you know, a little bit of a tit for tat at the moment.
Well, that's right. I mean, you didn't have that really a week and a half ago. We understand the Khashoggi situation, but yes, it's going to be interesting what happens over the weekend and certainly leading into the early part of next week and whether it flares up. From a geopolitical, I mean, that's really, I suppose, the latest news to affect the market. You're leading into that OPEC meeting on 6th of December. I think it'll probably be range-bound till then, unless something dramatic happens. Weather outages can happen, and of course, you know, from a geopolitical side. So there's that uncertainty, but, you know, IEA and OPEC are saying you're going to see less demand on that global picture leading into 2019.
What do you make of gold? We were just looking at the best and worst performers from an equity perspective, and dominated throughout the session by the gold stocks. Look, they benefit as well by the Aussie dollar gold price. View on the underlying gold price and how to get a read on what's driving it these days. It always wears a number of different hats. It is a difficult one to pick.
Well, it is. I mean, you've got to have a look at that, you know, the stock market as far as China's concerned and Asia, and we've seen that big washout. I think it's really underpinned, you know, the price of gold over the last couple of weeks. It's had a very strong, you know, rally up. Consolidating around about that 12.25 to 12.35 number. I say it'll probably hang there for a little while, you know, maybe a session or two. I wouldn't be surprised to see it edge higher from there. Many analysts are calling possibly a 12.50. And you've got that uncertainty. What's happening with rate rises, strength of US dollar, and generally, you know, US stock sell-offs. You saw the Dow last night come under pressure again, S&P. So that's really causing a little bit of concern, and I think that could push gold, you know, that little bit higher in the short term.
Yeah, that US dollar strength is pretty critical at the moment, and certainly been in place for a while. Your thoughts on it and whether or not it can go further?
Well, James, you know, it's 96. If we run our mind back, that's the US dollar index. We're trading at about 71. President Trump's inauguration, I think it was running at 102, 103. So that's January 17. Right. Then it crashed down to 89. And now it's rallied very strongly up from that 89 level, which was February of this year. And it's nearly put on 1% a month. You're now up the best part of around about 8 or 9% since that February lows of 89. I think it's got the capacity with rate rises, probably a 97 handle, 98 by Christmas for the US dollar index. So that gives us some sort of indication it's probably going to be a little bit stronger.
Mm-hmm. Does it get to a point at all, do you think, where it starts to worry the Fed at all?
I think it's probably worrying them, and I mean, I read something this morning. I had to laugh a little bit to myself. Anyway, Alan Greenspan said, you know, jawboning presidents are very much a part of, you know, they don't like to see too much of a dampener to economic cycles. And he said that Jerome Powell should just buy a pair of earmuffs, and that'll probably make it a little bit easier for him. I think that, yes, the Fed would be worried, but overall, yeah, they want to get that neutral stance, and I think you're going to see a few more, you know, naturally rate rises in 19. Though the jury's out how many, I think it's only too early to call. But yes, it's got to be a concern to them from a trade perspective and what's happening with China and the value of the yuan, of course.
Does that worry? I mean, we saw the BAML fund manager survey, and once again, the number one concern for their, you know, large fund manager clients is that trade war between the US and China. It certainly seems to be at the centre of a lot of the concerns for markets.
Well, it's uncharted waters. It's, you know, it's a new frontier in so many ways, James, and this is what causes the concern, which in turn really affects volatility. And you know, these sort of tit for tats and whatever happens from President Trump's side, if he really becomes aggressive over the next 6 or so weeks, it's going to have a great impact leading into Christmas, of course. And then you're going to look at the large US, you know, the Caterpillars and all of these sort of big market movers, what impact it has to these guys. So, you know, when it hits, if it hits the US side and it could crimp their side as far as growth, you know, it may be a very interesting scenario looking back, say, March of next year.
Yeah, absolutely. Look, Peter McGuire, got to leave there. Good to talk to you again. Thank you.
Thank you.